Have you ever experienced the situation where you went into a trade and it immediately blew off, no heat in the trade, and it just ran to your target at the other side of the range or to your range expansion? This is the ultimate goal. I'm a Stacey Burke style trader, and in this video I will show you the exact pattern across time frames that you have to hunt to experience this situation. This is part 3 of 5 of my Stacey Burke Plays series, and the episode is the Parabolic Day 0. So what are the plays? As an introduction, so I'm currently going through my major patterns that I'm hunting for coming to the screen every day. We already looked at trend continuations, the continuation plays, mainly low-hanging fruit. So if everything aligns with my multi-time frame system, we just seek for continuation trades. Then we were looking at reversal plays, the reversal into trend, so a pullback into a higher time frame trend, then reverses back into the trend, one of my favorite trades. And now, before we then finally come to the real reversals, I intentionally left that for the very end. In between, we discussed the parabolic plays. I love them a lot, and you will see that they are very relevant, especially also across all time frames. So we are looking at this parabolic patterns on the daily time frame for our setups, but they are relevant as candle patterns on the very low time frame and also as context on the higher time frame. So in this case, we are looking at day 0 or outside days. We have two different parabolic plays. It's the day 0 outside day play and the inside day play. This will be the next video I'm looking at. For me, these are the most reliable patterns you can have on the chart. And if you imagine overall how the markets move, they always go through these different stages one by one. So you typically have a trend situation, then in a trend or after a trend, you come into a consolidation, a parabolic situation that traps both sides. And then from there, it might do another leg up, or it turns into a reversal play and comes back down again. Then it might do 3 waves of continuation plays lower, and then might go into a parabolic play again. So these stages typically come one after one another, and once you really know what to look for, this is also very nice to play these different situations, because then you are completely independent from any market situation. You have a play for reversals, you have one for ranging markets, and you have also one for trending markets. So what's the day 0? The day 0 is a situation where we get traders trapped on both sides of a range that is developing. So let's say that's an existing day. Then the next day, we get a breakout. This breakout fails again and pulls back inside. So that's a long trap. Longs triggered into the market. The market fails again, pulls back in. They are underwater. Still not stopped out. Then the market might break down, triggering shorts into the market. But then again, pulling back in and then closing back inside. So then you see that's the classic day 0 pattern. Peak formation high, a range, peak formation low, and it closes back inside. That's important. Otherwise you are in a low-hanging fruit situation. Then often coming from there, you get a coil. And this coil could also be in between. So this pattern is a bit flexible. So you can have these two traps on one day. You can have them over 2 days. You can also have them over 3 days. And then you can have this blow off that we are now discussing, can be even on the same day, can be on the second day or on the third day. Sometimes you get an inside day afterwards. So this coil can be quite some time. But you have, and the longer this whole pattern takes to develop, typically the stronger the blow off will become. So this is the pattern forming, and that's your signal. Peak formation high, peak formation low, close inside. That's your pattern you're hunting for. And then going from there, you have a couple of different variations. And you always think about it the same way. So first of all, this is a very strong range. So this means this high, this peak formation high, and this peak formation low, they both trapped traders. So this is a very strong range for the moment. And as I always say, we trade the range until it breaks. So for the moment, this is a range, and we, as long as we are inside this range, we tend to trade the range. So this might blow off. That's one thing. So this coil, that's the very first trade you can have. So if this coils here, and you see this was a peak formation high, peak formation low, and you're coming out of the peak formation low, then you might already take a blow off if this is a parabolic day back to the top of this range. So this is your day zero range. The first trade is inside the range. Then you have to be very awake once we hit this range extreme, because there you have to watch very closely about timings, level, behavior of price to get a breakout continuation or a fake out high fail range trade reversal. So there you need to have all your senses in place, trade your session accordingly. But if it breaks out, this is very strong. So if this breaks out, you just take the one full range expansion of this range. And then you can be very certain that this reaches this range expansion, either on the day in your trade, sometimes also the next day, but you have a very strong parabolic pressure, and price will, with a very high probability, drive until this range expansion. On the other hand, if it fails, and you also really, you have to be a bit patient. Sometimes it breaks out, traps a lot of traders and fails late. If it comes back in, then the probability that this rotates through the range to the other side is quite strong. So you will see that this is also pretty similar to an inside day pattern that we discuss in the next video. The difference is that for the inside day, the reversal is the stronger trade. So the reversal is your premium trade target, kind of. And for the inside day, the stronger trade is the breakout continuation. They are both strong for both patterns, but I would say the day zero range expansion is the favorite run so range expansion is the favorite run for day zero, and the reversal is my favorite run for inside days. So that's the logic. So you wait until you see long trap, short trap, close inside, and then you look at the range. Once you break out of the range, you look at a 1x. Once you stay in the range, you look to the other side. That's it. So let's start looking at that on the 1 hour time frame. The blue ones are daily highs and lows. So here we already see our pattern. You see here there was a huge breakdown day. Then we got a fake out low, closing inside. Then we got a fake out high, closing inside. So what are we looking for? The first default situation is that we have a very strong range. And then from there, let's see what it does. It's coming up, hitting the high of the range, breaking down, hitting the low of the range. So that's the default situation. Peak formation low, peak formation high, strong range. Once you get a fake out high here, the default is that you take the trade back to the low of the outside day zero range. So here now the classic situation. You see here it's coiling sideways, peak formation low, peak formation high, coming back in. First we are looking at the range. Let's see what it does. Pulling down, breaking out. Okay, so once we are breaking out, what are we doing? We take our range expansion tool and pull it up, define our target, and then we look for longs. Let's see what is going on. Pullback, continuation, breakout, running up, hitting target. Not completely, so you have to give it a bit of range, but this target up here is typically a very strong one, and this is just a normal range expansion tool. You take this for a 1x up here. You see, also already important to note is that this can happen across multiple days also. So this target is one that you just put on your chart and you leave it on. And then potentially you get it with your next trade, or maybe also the day after. So this is kind of a magnet then, as long as you're trading above this level, and then you look for longs until you hit that level. That's the logic. So let's look at an outside day example. So here you see one day taking out the longs, long trap, short trap, closing back inside. So again, same logic. We look at the range first. Let's see what it's doing. Breaking down. As soon as we are breaking down, what are we doing? We take our range expansion tool and pull the 1x. And then we look for shorts, let it run, pull back, continuation over the next day, second day collapsing, hitting target. So you see, outside day, same logic. So here an example that develops over multiple days. So here you have your peak formation high, then it's breaking down. We don't have anything here. Then another breakdown, closes in breakdown, but then this day pulls it back in and makes this a fake out low. So then here, after this day pulls back in, you already have your range situation. So we are trading the range to the other side, potentially here. You already see that, but my point here is more than, you see that's a very wide range, but it's still valid. And here you see we are breaking out of the high of the range. So your first trade could have been the range trade. Now we are breaking out of the high of the range. What are we doing? We're taking our range expansion tool, pull it up to here. That's our target. And then we see what's going on. Pull back, continuation, one day, pull back, breakout, continuation, second day, hitting target. So that's your typical situation, peak formation high, peak formation low, and then you get your beautiful parabolic channel. Now a situation on the weekly time frame, and also you see how this is fractal across time frames. So it's often that you have a higher time frame pattern on the weekly or even on the monthly, and then lower time frame patterns on the daily, for example, or on the daily and on the session level, or also intra-session. We will look at that later. So here on the weekly level, here the orange ones are the weekly highs and lows, the blue ones are still the daily highs and lows. And here you see a weekly peak formation low, weekly peak formation high, closing back inside. So what are we looking at? Range, and then we go from there. But here as an example, you also see already how it's fractal within that. So you see here, for example, peak formation high, peak formation low, pulling back inside, blow off to 1x. And here, let's look at that. Peak formation high, peak formation low, inside, the range is a bit small here, blow off to the 1x. You get the idea. So, but let's look at our weekly time frame. So what is going on? First, we always look at the range. We are coming out of a peak formation high, so we expect the range trades to get to the lower side. Here, 1, 2, 3, pullback, reversal back into the trend, outside day, and then from this outside day, it pushes lower. this takes a bit on the weekly time frame. Of course, you have to give it a bit of time, but then you see now it takes the level and breaks down here. From there, we again do the same thing as always. We look at the one full range expansion. It's already down here, and then we let it run, pulling back in a bit. As I said, on the weekly time frame, this takes a bit, so it does another fake out low here. So always on the weekly time frame, you have to give it a bit of time to play out, but then it really loses the level, and then it's on its way. Breakdown, second breakdown, third breakdown, blowing off. That's the parabolic situation you're looking for. Here you see it again. Peak formation low, peak formation high, range, blow off. That's what we are hunting for. As we've already seen, this is fractal. So the pattern we are looking at, peak formation high, peak formation low, range, coil, blow off. This happens across all time frames. That's very important. So I always, when I do my multi-time frame analysis, coming from the month, looking at context, I look at the pattern. Then when I'm doing my thesis for setup, I look at the pattern. And then for the entries, I also look at the pattern. So here the month is for context, the week and the day 0 are for hunting the setup and the targets. The entries are coming on the 8 hour, the 1 hour, and the M15. So the 8 hour is for you to check, and Trend Predator also looks at that, of course. So we will see that later. The 1 hour is done by my open box approach. That's exactly what we are also looking there, and you will see later. I will show you that the open box I developed out of this pattern, because very often equity open takes the high, peak formation high, takes the low, peak formation low, trapping both sides, and then the open box breaks out to the 1x. That is the open box strategy. It's completely taken from the 0 pattern. But then also on the M15, even if you're in the very low time frame, this is also a nice pattern for you to trade and to get the best entries and have a safe entry for your trades. So there is 2 types of trades that we are taking with this pattern. Let's dive into that deeper. First, let's look at the continuations. So as we said, the rationale is always important to understand what is happening here. Typically, if you get this pattern, that means that the market doesn't have enough liquidity yet to do the next leg. So it's consolidating and then trapping traders on both sides of the range. Breaking out, trapping them. Breaking down, trapping them. Longs and shorts trapped, a lot of liquidity on both sides. And these 2 sides are then more or less fighting for the direction the whole thing goes. And then the market maker often might give it a little push, and then it rolls over. And this is your creeping trends that you're seeing. The creeping trend means that both sides are fighting for direction, and then one side is losing its grip. And then these guys are going out of their position one by one, and the more are going out, the stronger it accelerates, and the more are taken out additionally. So this might blow off from the inside, taking those out, and then from here, these guys, if it really breaks out, then these shorts and also these longs, potentially they all go out of their positions. They at break even because they have been underwater for so long, and these guys because they have their stops potentially on the other side of the range. And then if all of those go out of their positions, then this makes its explosive move to the 1x. And the nice thing is, and why this is so explosive, this one full range expansion move is not dependent on new traders coming into the market. It's mainly the liquidity you already have on the charts. That's why it's so reliable. So it's everything there. And once this just flips to the long side, all of these guys going out of their positions, and this makes the move. And if you join the move here, you can be pretty sure that it goes all the way to the other side. And then, of course, additionally, there might be traders joining that move on top. So that's what's happening here. Market is collecting liquidity, and then this liquidity is taken to make the next leg. So 3 trades here to be had on this pattern in a continuation situation. The first one is the inside blow-off. I like that a lot. It's rather the expert trade, I would say, similar to the inside day. But it's a nice trade. So you have a fake out high, fake out low, and then if you get a parabolic pattern on the day with a nice parabolic channel, and also you might have additional confluence on the higher time frames. So if we get this pattern, we always check, as always, multi-time frame logic trading. What's the weekly bias? What's the monthly bias? And if the weekly and the monthly bias is bullish, and you're coming out of a fake out low in this pattern, then of course you're looking for longs. And if you get a nice parabolic channel here, that's a very nice trade to take it back to the high of the day 0 range. So first, always range. Check your classic situations, your classic confluence, multi-time frame signals, and then see what the trade might give you. Also, breakout close, breakdown close, out of balance can be very helpful. So if this is an out of balance breakdown close that then comes back in, that means that there is even more traders trapped. And then the move away from that might be even stronger. So you might even have a breakout close here, failing, coming back inside, breakdown close here, coming back inside, then it's even stronger. So the more signals you get along the way here that trap traders, the stronger the situation gets. And then, of course, you need to look very deeply into the setups on the day. So you might get 3 sessions of drop, for example, here, with then a blow off, or it might be a parabolic session, peak formation high, peak formation low, on the lower level, blow off, or it's just a parabolic day here. So from Asia blowing through the whole day. This is what you see very often. A parabolic day needs parabolic pressure from the higher time frames. So if you have that peak formation high, peak formation low, then you might get a parabolic day. And then once you have here your previous fake out low continuation trade, you first take this, of course, to previous day high, but the major target here is the day 0 high. So you might have a breakout continuation or holding through that. And then as soon as it breaks out here, if it breaks this range, as we discussed, then you might get a breakout pullback continuation, as we've seen in the examples, and then it goes typically to the 1x. Maybe not on the same day. You have to judge the pattern a bit, but it's with a very high probability it reaches that, and that's then the classic blow-off breakout continuation trade to the range expansion target. So now an example of an outside day blow-off trade from the inside. That's NASDAQ 6th of October, so just recently. So you see here nicely peak formation high, peak formation low, a Friday. That's Thursday's high and low. And then Monday starts pulling up, all time frames bullish. So we have a daily fake out low here, also a weekly and a monthly breakout. So from there, coming into the London session, we are of course interested in a long trade back to the high of the week. So let's put that on. That's the basic idea. And then let's see how this presents. So that's the idea. That would be 75 pip. That's a nice trade. Then let's go one level deeper. That's exactly how I would trade it. So we see now here the 8-hour range. We always want the 8-hour range to be triggered. So we want to have an 8-hour breakout here. So we want to be above this here, and we already see here London first hour high and low, and now the open box prints. The ones following me know I always wait for the open box 30 minutes after equity open. What's going on? We didn't trigger the 8-hour level yet. Still inside, and it just pulled down. So that's an open box breakdown, and it hits the open box 1x. That's a parabolic reversal open box pattern against our trade. So that just means we don't do anything. So for a moment the 8 hours in breakdown from here, but our trade is long. So we wait until price comes back up here again. We never go in the other direction in such a situation. So we wait for the 8 hour to be triggered. Okay, now it's triggered, but we're still in fake out high. So we are not interested yet. We wait for time rotations and to be up. So now here it's breaking up. This is exactly where I go to the 5 minute then. And then we zoom in here and look deeply what it does. So there you see you get a pullback and a switch candle. So this bullish switch candle, 11:10. 11:15 is one of my sweet spot entries. So this would be the entry after the switch candle, just taking exactly the next candle, 11:15, target a bit shy of the high of the day. Very nice blow off situation. You could put your stop loss here a bit inside the open box around the open level. And then we just let it run. Let's see what's going on. It works higher, pulls a big back, breaks out, goes up. Let's see, hits target. So, and you see here, very often the trades out of London, you can let them run into the New York session. And then you get your classic New York 9:15 Eastern is typically the pivot, interestingly. So this is a very nice blow off into the high of the day. There we take our profit. 80 pips are 7 or something. Good enough, I would say. So here now a blow off situation, breakout blow off. This is gold, 22nd of August. Let's look at the pattern. We see Monday already starts as an outside day. That's already interesting. Then Tuesday breaks down. Wednesday comes back in. So that's, for the moment, this is our range. But we know this is parabolic. Then Wednesday does another outside day. Still interesting. Then fake out high coming back in. So that's our range for now. So let's observe it. That's definitely then on our list. We have a couple of options. Either it blows off to the other side of the range. I wouldn't typically do that mid-range, only in a very narrow situation. But this is definitely something to watch. And let's go to the 15. So 15-minute time frame, session screening. We're coming into the New York session, and you see here it hits the previous day low and prints a daily fake out low here. So first hour New York for the moment, and then one more leg down. But of course we don't take trades in first hour, otherwise this could potentially be a parabolic channel continuation trade. But as you know, we wait for the open box and equity open especially. So now we have the fresh 8 hour, we are pulling up. So we have now the daily and the 8 hour bullish. There is the weekly, one more. Now we have equity open, and it immediately pushes up, hits the 8 hour. So that's our signal to go to the 5 minute. And also look at the pattern. You see here now we have a parabolic session pattern. So peak formation high, peak formation low, also with a daily fake out low. If I see this, I want to have this as a range expansion on the chart. I mean, for the moment, this is a range, as we always say, but also let's put this as a range expansion as a potential target already. So let's see what it does. Our thesis from here would be that we take this from the closing price potentially to the previous day high or up here. That would be the logic as a parabolic situation if we clearly clear all these levels. So 5-minute time frame. Let's see what's going on. Let's zoom in a bit that we see it better, and still have everything on the chart. So we wait for the open box, as you know. What's going on? Trading into third hour, and third hour here breaks out. I mean, this was a very aggressive move. You potentially could try to catch that, but I mean, this is like, I don't know, let's measure that. That's already 150 pip move out of the open box breakout. You potentially don't catch that, but that would be the inside blow-off trade. But you will see you don't necessarily take that, because then I think I even took that trade. You wait for it to break out here again. And here as latest, when this comes up again here, then you have all time frames bullish, peak formation high, peak formation low, blow off to your one full range expansion. And also on the higher time frames, we have seen outside day already on Monday, so very parabolic after all. So this is this would have been my entry here. I think I even took it, and also it's my time rotation logic here with the 1005. It's my favorite entry sweet spot, as you know. And then from here we just would let it run, and you see it just comes up and hits target. So this 200 pips R6 trade, day 0 breakout parabolic to the day 0 range expansion of the 3-session setup. If you don't get the breakout, so here that's the same price action until here. You might have taken the blow-off trade to the high of the range, but then it rejects the day 0 high. Then you of course have to check again multi-time frame. So if you look for a short, you want to have the higher time frames bearish. Then you would of course be careful with the inside trade here. So if this is bearish, you wouldn't take the blow-off long typically. But then you wait for it to reject. If it doesn't break out, if it comes back in here, then you already might have here a reversal high of day. But then the better trade is this fake out high continuation inside the day 0 range back to the low of the day 0 range. So this means that this is a coil, as we just discussed, traders trapped on both sides, but the market is not ready yet with that, not finished yet. So it might just go on, trap longs one more time, come back down, trap shorts one more time. Again, the logic here is the same. You might have breakout close, breakdown close, out of balance. That's helping you. And you, of course, check the multi-time frame alignment. Other than that, you look at the setups on the day. So this might be 3 sessions of rise, rollover, 8-hour fake out high, daily fake out high, rollover, then fake out high, continuation trade to the low of the day. Or you get a parabolic session. Peak formation high, peak formation low, blow off. Or also peak formation low, peak formation high, blow off to the bottom. Or a deathline setup, breaking out, trapping traders above this daily breakout level, then collapsing down, going down to the other side of the range. You get the idea. So now an example of a day 0 range trade. You see here that's US 30, 22nd of August. It started with a narrow opening range into the week. Then we got a daily fake out high, inside day, daily fake out low. As we discussed, this can span across a couple of days, but this is now a very strong range. As we discussed, we see the daily is bullish, daily fake out low. From here, the week is in breakout, the month here is in a fake out high. So it's not completely aligned, but that's fine. I always trade from the lower time frame. So in a parabolic situation, especially, I might counter trend the higher time frames. So I'm interested. Thesis generation would be something like this. You trade this back to the high of the day, the high of the range, something like this. Pretty large. Let's see how far this takes us, but for US 30, sometimes 300 pip trades can be fine. So let's look at the lower time frames. So that's Asia. Now we're trading into the London session. I mean, it's US 30. I typically don't trade that in the London session. It's also not a trade I took. It's more for illustration. So we have now our range. As we said, we are interested in a long. For the moment, we see here closing price is the line in the sand. 8 hour is not relevant yet. We need to see how this progress. Now you see 8 hour hit down here. So we are already in the game. At the moment it's bearish. It's pulling down, but immediately coming back up into the London session. That's very good. That's a very strong and aggressive stop hunt. That's even more bullish then. But of course, from there we wait for what the London session brings. We go down to the 5-minute time frame. We have our trade, and we are here already in the game. So it breaks out of the open box. We have our levels all down here. We have our bullish bias. So this would be already my entry. Something like this. And then let's see, let's let it run. It just does what you would expect from a parabolic trade, pulling up into the weekly closing price. So in such a trade, you need to see how long you want to let that run. Now we're coming into the New York session. I think in this case, you could even let that run and it blows off completely and completes the range, and then even blows off to a range expansion trade additionally. So there you see, this kind of trades I especially like from London, because there you have more time to let it run. Not sure if I would wait for an equity open here, but even if you don't, if you cut the trade here around the previous day high, it's still a 140 pip trade with an R4 or 5 or something. So that's a nice inside day zero range trade example. Okay, now we've seen examples and discussed a bit what we are talking about. So what are the patterns and the setups we are hunting, and I showed you some examples. These were no trades that I took. That was just randomly picked to illustrate what we are hunting for. So now we are diving into the theory, how to trade that, and then we do a couple of real trade examples that I took out of my trade journal. So what's the multi-time frame trading process, and how do we apply this to the day zero pattern? So as you know, we always look in first hour, we check thesis generation and make our plan. Then we screen the session accordingly from second into third hour. And in third hour, once we got our confirmation, once the 8 hour is triggered and we have our setup, we check the EMA ribbon and the open box. How do we do this for the day zero setup? You see a lot of orange boxes here because it kind of spans all these different steps on all time frames, as we already discussed. So mainly you're looking in your thesis generation on the daily time frame first if you find any outside days or day zero patterns. But not only that, you also look one level higher. As we already seen, you look at the weekly template, but you also look at the zero patterns on the weekly and on the monthly time frame, because these give you a very nice context overall, and you see if the higher time frames might be parabolic and give you nice range expansion targets on the lower time frame. So you might trade a week zero template and just take trend trades on the daily time frame. I do this all the time. That's one of the best situations you can have. Parabolic on the higher time frame, and then you just take trend trades until the higher time frame target is hit on the lower time frame. So here we're really hunting for the parabolic situations. Then we come into the session. And in the session, we wait clearly for trend predator multi-time frame to show the setup, of course, as always. We wait for the 8 hour to be triggered, but we also check the daily template for parabolic situations. So this is also important for all other plays, interestingly, of course. So if you have a trend situation on the higher time frame, it's still very nice if you get a parabolic situation in the daily template. So if you have parabolic on both, it's even better, of course, as we already seen in the examples. If you have a session parabolic, that's even better. And then if this is confirmed, you go to the entry screening, and there you do this again. The open box, as we already discussed, is also looking for parabolic situations. So if you have a very nice open box that prints a peak formation high, peak formation low, this is helpful. And you also look at the session template. Sometimes the first hour makes a peak formation high, the second hour makes a peak formation low, and then you get another parabolic situation on the 1 hour time frame. So all of these are relevant, and you have always a pattern in a pattern in a pattern, and the better these patterns align, the better your trades are. And if this is parabolic across all time frames, then you get your real explosive moves that don't come back. So let's go through this step by step. The weekly template. We don't look on the very high time frame. I think you get that, and you will see this in the trade examples also, what a month 0 means or a week 0. We will look at that, but let's now discuss what we are hunting for within the weekly template. So you see here that our two different patterns. That's a day 0 range expansion blow-off, and this is a day 0 range trade. So if you get those, where within the weekly template, within the previous week's range, would you take that preferably? This is always important to understand, because this gives you real edge once you understand that. So we have the major question: what's the weekly range like, and where are we trading according to it in the current week? And what's the higher time frame trend? So that's multi-time frame. So if we are in a bullish higher time frame trend, and this is our previous week's high and low, of course, the parabolic continuation, we want to take them from previous week's low, as much space to the top as possible. But as we discussed, this is parabolic, and a parabolic move fuels its move from the lower time frame. So you're not necessarily as sensitive to the higher time frames and to the range as you would be with a trend trade, for example. So even if you are mid-range and you get a nice pattern, you might still take the blow-off trade into previous week's high. I do this also. With a trend trade, I wouldn't do that. I would really wait for it to break through. So this is also possible. But even better, of course, after breaking out, then you often get a coil then above previous week's high, and then you get the next leg up. The reversals, of course, the other way around. So if you're trading into previous week's high with such a day 0 situation, then a day 0 range trade reversal from this previous week's high is, of course, a very nice option. And the same if you break down, pull back day 0 pattern, and then you take the continuation as a range trade in the day 0 pattern. So always think about the higher time frame situation and the ranges where it hurts your trade potentially and where it helps. That's very important. So example, so we already looked at these weekly templates a bit. What's nice for all kinds of parabolic trades, if you are looking for a parabolic week, is if the Monday is narrow. So a narrow opening range, or even an inside day, or even an outside day. That's great if it starts like this. But then often you get a peak formation low, peak formation high, day 0 template, then you potentially even get an inside day. We already discussed that. That makes it even stronger. There could also be an inside day in between. Important is that you have a peak formation, fake out high, fake out low on both sides of the range. And then you get potentially your parabolic channel, blow off here to the 1x. And then maybe even a low-hanging fruit continuation and weak. So that's just an example. Of course, there's a lot of different variations to that. So setups. How do we hunt the multi-time frame setups? The interesting thing with these zero patterns is that they are by definition at the core of the multi-time frame system, because you always follow the fake outs. So you don't trade differently to other setups. You completely follow the multi-time frame logic and the trend predator setups. I will showcase you this to you here, and then the day zero pattern is kind of an overlay. That's like the inside day also. Trend predator doesn't calculate the quality of the zero pattern because it's a bit tricky to spot and to get it fully mechanical, so it's better to do that yourself. But then you just still rely on the trend predator setups that is showing you. So you see here, you get a fake out high, for example. So breakout first, then fake out high. Then it breaks down, then fake out low. So trend predator in the multi-time frame table then shows you, and this is where it already signals you that there's something going on, that you see that the previous is a fake out high, the current is a fake out low. So red and green in the table. So this already shows you coil. I'm thinking about making this a signal going forward for the next release. Maybe we do that. And then coiling here, but the last one was a fake out low. So then the next day, this is a previous day fake out low continuation range trade. Completely flashed by trend predator. Previous setups are very strong with the 3-star here coming up. Then you get even a breakout continuation trade here if everything is aligning, and then you get a potential breakout continuation low-hanging fruit 2 or 3-star also if everything is aligning, if it's bullish. If you're in a bearish situation, you would rather look for the shorts. Then all these longs would get punished with their quality ratings, of course. But potentially you could also take then a reversal high of day, for example. So if this breaks out here, hits the day zero range high, and then after maybe 3 sessions of rise on this day, you might even counter trend the daily breakout. We have later an example where I did that in a trade, a very strong reversal setup, I think on silver or something. So here potentially reversal high of day, if you have the higher time frames bearish, within the day zero range could be a nice trade. It's a 1 or a 2-star, and then once it becomes a fake out high, of course this is a very nice fake out high continuation, 3-star, everything aligning, and you also then make the overlay with the day zero pattern and take that with even more confidence and hold to target. So this means that in principle all of the multi-time frame setups that I typically show and discuss with you, they are all relevant. So it could be a breakout continuation, it can be a fake out continuation, it can be a previous day fake out continuation, but also the 2-stars are relevant as we just seen. So you could have a reversal high of day if you reject from the day zero high, for example, and so on. I won't go into detail here now. You know those. I think important to understand is that trend predator, for the ones not familiar with it, it contains 180 different setup variations and leads you through the setup identification process, and together with the open box you get nicely into these trades. And in this case you take, as I said, the day zero pattern as a confluence, as context to filter these trades and prioritize them even stronger. So setup on the day, what are we looking for there? Obviously, as we just discussed, all of those are relevant in the specific setup situations, so it depends on in which direction you're trading and so on, but it's always important to check the setup on the day. So if you're looking for a long trade, of course you want to have a low of day, low of session short squeeze, for example, in a 3-session setup, or potentially for the blow-off trades, especially you want to have a parabolic 3-session setup. So either a parabolic day or a breakout continuation, or, and that's why this is orange here, as we discussed before, or you get even a parabolic session on the day. That's then even better. And this is again the zero situation. So potentially Asia makes a peak formation high, fake out high, London peak formation low, fake out low, consolidation into New York, breakout, blow off to the top to the 1x of the peak formation high, peak formation low. So you see this pattern is all over the place, and especially on the setup on the day, I like to see it for all kinds of plays. So for the entries, this is also relevant as for most of the other plays. So especially maybe thinking about the blow-off trades, there it's always nice to have a parabolic channel. So always wait for a trap potentially, M15, M5 fake out low, and then if you come into your 8-hour open box breakout, this could be a first parabolic blow-off entry if you're very convinced that it's parabolic. If not, you wait for the pullback continuation trap, as I always like to do also, and then you get an M15 M5 fake out low continuation trap often, and this is then the safe entry for a long trade. And they're always important to understand and keep in mind. The good trade is the hard trade. These breakout continuation trade, these parabolic channels, they are very hard psychologically to take because you're buying the high, obviously. But as you know me, I love that because it's not everyone is doing that, and this is exactly why it works so nice. Different on the reversal ones. So the zero reversal range trade, fake out high continuation, there you are often in a very classic reversal situation. As you know, for the reversals, I don't like the first entry points. So you might work into a high, previous day high, 8-hour high, whatever. Then this is your first trap, and you might get a M15, M5 situation, maybe with a switch candle here. And then you could aggressively already take this entry here, but it's, as I always say, that's the obvious one. So we don't want to take that. Typically, we wait for the first lower low. Then you get a continuation trap here, potentially with another M15, M5 fake out high, potentially open box breakdown. This is the better one. So as I call it, the reversal continuation. So don't hunt for selling the high. Wait for it to break structure, to lock in the high, to let the first mouse trade in and take the first traders out, and then you take the next leg down. That's the much better option. So then open box. We have seen there's a lot of different variations. Of course, the open box, we just trade it as always. So we potentially take open box range trades. Preferably always we take open box breakout trades. But just to highlight this to you, that the parabolic reversal scenario and also the breakout scenario of the open box is also a zero pattern. So this is what you often get: equity opening, putting in a low, putting in a high, consolidating sideways, then blowing off to the 1x. And then often also if this liquidity is blown off and hits the 1x, potentially if you have a bearish overall top-down situation, you might even short that again after it blew off to the 1x, or then if it comes back in, take the range trade again. So you see this pattern is just relevant across all time frames. That's the important thing to remember. So then final confirmation, and always just that you don't forget that, is the ribbon. And of course also the closes and breakouts. We always like to see that. This can be the fake out high after a fake out low reversal. It can as a range trade. And then you have this high even stronger locked in, but it can also be, of course, a continuation ribbon entry. But it's always good to have the ribbon as a check at the final check on the chart and see that you trade away from the ribbon. You're aware of that. If you want to dive deeper into that, there is a video on my 5-star concept and thinking. Good. So this looks complex, but maybe to summarize that, going through the thinking process for a day zero end to end. So we start off, of course, with the monthly and weekly bias, as always. We check the weekly template. And then, of course, especially we want to see the day zero pattern on the chart. So day zero high, day zero low. That's where it starts. Then we check, is the day zero range narrow or wide? If it's narrow, we want to look for range expansion trades. If it's wide, we rather look for range trades. Then we check if we got a breakdown close, breakout close, or an out of balance situation that sometimes makes it even stronger, as we just discussed. Then we just follow the classic multi-time frame logic. We follow the bias of the 8-hour, we follow the bias of the first hour high and low, the open box. We keep in mind where previous day high, previous day low is. Then we make our thesis. We wait for the 8-hour to be triggered. We check if there is a parabolic channel. We trade the open box. And then we see what kind of day zero trades do we get. Is it potentially a parabolic channel range trade inside, or are we already breaking out? Then how far is the open, the outside day zero 1x? Is that realistic, or do we rather go to the open box 1x? Then we wait for the continuation trap, and then depending on the overall pattern, we decide if it's an iron fist going to the open box 1x or not. So this is for me the classic iron fist trade. If it's a real parabolic pattern and we have a very clear 1x target, I'm very happy to hold the trade longer, sometimes a couple of hours, even iron fist as I call it, without touching anything and letting it just run to target or getting stopped out. That's the thinking process. Rinse and repeat. You always go through the same things in a row. It's a one-way street, as I say. You start from the higher time frames and then you go down to the lower time frames, and then there is nothing to zoom out anymore. You just follow the process, wait for the continuation trap, and then you hit your trade. So to summarize the playbook, where are we in the overall discussions? We discussed the trend continuation long. We discussed the reversal into trend. We now discuss the day zero pattern. As you see here, I have in my personal playbook, I split this differently. I just made the 2 episodes now related to the pattern because I think it's better to discuss it. In my playbook, I rather think about it as parabolic continuations, longs, or parabolic reversals. And this can both be either inside days or day zeros. But it doesn't matter. That's just how I look at it, because if in the end you will see after the next video, the inside day and the day zero pattern are pretty similar to trades. It's just a different priority, as I already mentioned. I rather go for the continuation trades with a day zero pattern, and I prefer the reversal trade for a inside day pattern, but also the other way around. It's also very nice trades. And there, what jumps into mind, you see here, for example, that the monthly bias is not so important, because the parabolic trades, they fuel their move from the lower time frames, as we discussed. So you really want to be clear that the patterns on the intra-session setup looks nice, that the setup on the day fits to what you think. Of the signals are really the inside day, outside day, of course. You potentially have also other signals that are helping, like a first green day or 3 days of longs or shorts. And then you just check on the weekly and monthly that nothing is going against your trade. So you don't need a lot of confluence. You just show it if it's very strong, or if it's a very, very strong counter argument. So are you at the low of week or in breakout, for example, for the continuation, as we just discussed, no strong downtrend. So I'm already fine if I don't have a strong downtrend, then I still take a parabolic breakout continuation trade. Potentially it's even parabolic. as we discussed. So there you mainly see that it's nothing hurting your trade. You don't need a lot of confluence for your trades as you need for these trend continuations or reversal continuations, or also the real reversal. There is a lot of things you need to have in your back on the higher time frames. Also for the parabolics, that's not the case. So now, enough theory. Let's go into real trade examples to wrap this up and to show you that I take these trades preferably in my daily routine, and I really hit them a lot. So let's start with the continuation trades as examples. So I would first start with the inside examples and then with the blow-off outside examples. First example, 20th of October, so very recent gold trade, reversal into uptrend, and you see that is also often a combination of these things. Reversal into uptrend, outside day, inside play. First red day fail signal, previous fake out low continuation. So we had a fake out low on the daily. You see that here it's even a first red day. A 3-star multi-time frame setup, so very nice. Aggressive entry 10-15. You see here the entry arrow. I aggressively took it below the 8-hour because it was not a fake out high. Open box breakout, and you see here I like to take those aggressively, but that I don't miss the trade, but often it pulls back afterwards and does this continuation entry. This is the safer option. I could have even scaled in one more. Still, if you take this here aggressively, I think I even took it inside because there was not were no traders trapped on the high. And then it's sometimes safe to take it inside also. Entry 10-15 sweet spot, so that was 10-15. I like that entry. After open box fake out low switch candle, VWAP reclaim, target open box 1x, stop hunt almost took me out, target hit after 45 minutes, 250 pip R5. So this looks relatively small, but open box 1x is my classic trade, and in many cases this is by far enough for your trade. So let's look at the chart, how this presented itself. So gold situation, 20th of October, as I said, strong uptrend. That's the Friday. Friday put in a peak formation high, peak formation low, outside day. Daily fake out low. The week was in breakout. We are coming out of the London session into the New York session from the low. So this looks like an inside blow-off situation. You need to see how far this comes up. But for the moment, as we always discuss, this is your range. And this potentially looks like a parabolic channel from the inside. Let's look one level deeper. So coming into New York first hour, here hitting the New York open level of the day before, taking out the liquidity. Let's see how it opens. We are interested in a long trade, as we discussed. Haven't put it on yet, but of course you do something like this here. But you see already that's 500 pips. That's of course a bit much. So you know already you might go to this London open or maybe even lower. Let's leave it on for the moment. Let's then see what's how it presents itself. We're coming into the open box. Let's go to the 5-minute time frame. We are looking for the continuation, as we said, open box printing. Let's see what it's going on, pulling down. Always nice to see that. And this is a very nice open box fake out low. The multi-time frame situation is completely bullish for the moment. So we have the whole multi-time frame table is bullish. You don't see it right now because I want to zoom into that a bit more. And also the trend predator setup shows previous fake out low, continuation 3-star. So very strong. Then a fake out low here with a 5-minute switch candle. That's the VWAP. We have 10.05. So this could already have been an entry. I didn't take this one. I think I took this one here. 0.10. So right the rollover here. And then you see already that you have already a 300 pip trade here with the open box 1x. So I like to take the open box from the inside as long as I don't have any fake out highs. So you see this was breaking out and rolling over, and the open box here just melts down and then does a fake out low. So that's a short trap, but there is no long trap because there's no real level. So that's the entry. And then from there, I would just let it run. It's coming up. As often, the high of the day is a critical moment. So it hits the high of the day and then rejects and pulls back into the open box high, even with a switch candle. That's a critical moment where you need to be sure that you don't get shaken out. But it immediately does another switch candle up. So this could have been a re-entry here at 10.35. I like this entry as well, but I just stayed in there because the pattern here was so strong. But on the other hand, if you have a switch candle to the low and then a switch candle to the top after one another, that's even more bullish. And then from there, it just runs to target, and you see it could have even been holding a bit longer, but this is, for me, I mean, that's already after 11. There I wrap up my session typically, and I'm not wanna holding on for hours. And if I'm already here in an R5 trade, that's good enough. So next example, short trade, day 0 inside trade play, DJ. Previous fake out high continuation. So the day was in a fake out high at the time of the entry. After day 0, we will look at the pattern later. Entry 10:30 after VWAP retest. So you see here open box. Did an 8-hour fake out low even, but the also the 8-hour here was an outside 8-hour. That's also very nice, also very parabolic. And the higher time frame parabolic, then I'm sometimes even counter trending that, but it was not an open box fake out low. So it was just an 8-hour fake out low, and I actually didn't counter trend it. I waited for the closing price retest here, switch candle, VWAP retest, and then once it lost the 8-hour again, this was my entry here. So M15 fake out high, 8-hour breakdown, M15 fake out high, 8-hour breakdown. Target Friday low. There was some level here, obviously, but I cut with 1-hour time rotation, 11 o'clock, good enough, 100 pip R5. So this is almost open box 1x. We will see that then in a minute. But then after this huge dump here down into time rotation, many of you know that my edge probably comes also from my exits. So if I see that I'm in a nice trade with the 1-hour time rotation and it works into it, then I very often just cut the trade and call it a day. So let's look at the chart. What does the pattern look like? We had here an outside day on Friday, peak formation low, a little peak formation high, but then it gapped up on Monday, broke out of the previous week's high, and immediately pulled back in. So that's a huge peak formation high, a weekly fake out high, and a daily fake out high after a daily fake out low. Very nice pattern. What's the range? This is our range. And now losing the daily level here, we of course look for a trade that could be something like this here. That could be the thesis, that this loses the closing price and then we take it down here and either to the previous day low or to the other side of the range. This then needs to be decided upon. So let's look one level deeper. So that's the situation, 15-minute time frame with my session screener template. That's the range. The idea was to take it short around the closing price. Let's see how this presents now. 15-minute time frame. How does it trade? We wait for New York Open. New York Open hits the 8-hour down here. So that's shifts our trade down here. The 8-hour is triggered. So we go to the 5-minute and see what's going on in detail. Interested in the short. Let's see what the open box brings. It pulls back here a bit, as we already seen, working into closing price. That's the VWAP. At the moment, bullishly, so no reason to do anything. But then we get a switch candle that makes us interested. But we see here is the 8-hour fake out low level, so we definitely want to lose that first, and then we do that. This is the entry here at, let's look at the clock, exactly at 10:30. That's nice. And then from there I let the trade run. Open box 1x is down here. It would be end of the range. I think I cut it here into the 1-hour time rotation because it's just enough. An R4 trade. Not sure what it does then. Yeah, okay, it just goes to target. So that was too conservative. So we could have just taken it to the open box 1x range extreme. Then it would be an even better trade. So inside play, very nicely presented. So here a very aggressive parabolic play. I won't go to the chart on this one, otherwise it's going becoming too long after all. It's a US 30 trade, inside week, fake out low. So we have a higher time frame parabolic situation already pushing up. And then additionally a day 0 parabolic. So day 0 and inside week pushing in the same direction. Out of balance uptrend also helping. So I was already watching this very closely, and I mean I rarely do that, but this pattern was so nice that I watched already into equity open, and US 30 is the only pair where I do equity open blow-off trades. And in this case this worked very nicely. I just waited for this off closing price, then came up, broke out of the 8-hour here. This was probably the daily. That was then the outside day blow-off situation. And then I think there was some naked point of control here, monthly closing price or something. So it was just a first bar, 5-minute entry. Target yesterday's naked New York Open level. Okay, that was up here exactly 170 pip R5. So this was my trade that I often do, 3 parabolic 5-minute bars, and then the end of the third bar into the 15-minute rotation. For me, the trading session was already over with an R5 trade. So you see, if you hunt and spot these parabolic patterns, they sometimes give such nice explosive trades that you almost can't believe how quickly you are done with your day. So next example, outside day breakout continuation. This is one maybe also interesting, where I got the direction wrong one time. And I also broke my rules because I traded inside the open box with the 15-minute rotation. I think that was the last time I did that for the moment. So since then I wait for the open box to close again. There it was a situation where the outside day could have blown off in both directions. So I thought I was smart, and this already was the fake out high of the outside day. We will look at the pattern and try to short it, but then it immediately came back up. But I had the flexibility to then take the classic normal trade, and it took the outside day breakout continuation to the open box 1x. So that's SPX at the 18th of September. Let's look at the chart. So there you see the situation. Bullish chart. So pretty stupid. It was a reversal attempt. Here you see the fake out low into the weekly level. So weekly breakout. And then here fake out high. And then I thought this does another fake out high, as it printed a huge A top and broke down. But as I have in my own rules, be careful with large A tops, because they often just trap shorts here and do another leg up. But somehow I thought I want to try the range trade, this one here. As we already seen, we didn't get that. It was a stupid idea. But then if you don't get that, of course, the classic situation, bullish, fake out high, fake out low, then you potentially, of course, take here the breakout continuation back to the high of the day. That's the better plan. And I fortunately remembered that in the moment and then took it and recovered myself. So let's look at the chart. So you see it here, the peak formation high, and here's the 8-hour fake out high for the moment, and this is the daily level. Let's see how this presents. New York opens and immediately breaks down with the 30-minute rotation. So it hits already our criteria to go one time frame lower. And then let's see how this trades on. That's the 45. No, this was I was even breaking my time rotation rules, obviously. So no one is safe from that. So this really trapped me, and that's exactly why I wait for the open box, because here you see it trapped the high. Now it traps the low with the 15-minute rotation, and you immediately get a switch candle. So to short that is exactly what the market wants you to. So it pulled me in. I don't do that anymore. Got stopped out immediately, recovered for the next 10-15 minutes, and then it's coming back up. And then if this goes in a continuation, we are obviously interested in this above this daily level. And then let's see how it trades on. Here you get a very nice 5-minute fake out low switch candle. That's already nice, but it's still too early. Let's see what it does then. Yes, I think I took it exactly with 10 o'clock. So here, exactly when the open box closed, this is your moment to take the trade. That's what I took, and then I just took it up to the first hour high and open box 1x. That's 230 pips. And this is then your classic open box 1x, and in this case, day 0 range trade. And you see here again how this open box 1x, why this is so nice, especially here, because it's a fake out high, fake out low, breakout to the 1x. And as I said, if this 1x is hit with time rotations, here it's 10:30, then often you get the pullback. Let's see what it does then. Pulling back down, taking out all of your trade if you would be into that, and then it would be gone. So this was the trade. Nice recovery. So an outside day breakout continuation. Next days in a parabolic week on silver, 12th of September. Full multi-time frame alignment, strong uptrend. So you see here breakout continuation, low hanging fruit. It's just a 1 star, but fully aligned. It's a 1 star because it's an 8-hour 3 longs and low hanging fruit. Outside day 1x target above. We will look at that in a minute. Open box breakout retest. So here I was patient compared to the other one. Switch candle 10:20 for my entry. Target open box 2x. You see open box 1x, 2x up here. Hit after 30 minutes. 230 pips are 4.5. So you see here it nicely broke out of the 8 hour, pulled back, switch candle. I even waited for the switch candle to close, and then I entered from here, open box 2x, and I made a first touch exit in this case because it was already far up, and then it immediately pulled back. So this was a very nice exit and a nice trade. Let's look at the higher time frame situation. So here you see it. The week started off with an outside day. You know, I like that. Parabolic week potentially. Then inside day. Then fake out low. So you could say that this is also a day 0 kind of, but this is the strong range here. But then it broke out, retest of the weekly, daily breakout. So this is your range that you broke out from, and your target, the 1x, is up here. So this is pulling up, so you're very interested in breakout continuation trades, and this is exactly what I did. I think we don't need to go to the lower time frame here. You just seen the trade. This was then the open box continuation breakout trade in the London session following the higher time frame parabolic trend. Gold example, 23rd of September, also breakout continuation. So in this time, as you know, I mean, silver and gold were trending like crazy. And I took a lot of breakout continuation trades because all of them had very nice day 0 or week 0 targets above. Here, trend continuation play, breakout continuation, day 0 target of last week above. So sometimes it's a breakout continuation of next over the next days, as we discussed. So here above here was the 1x of the day 0 target. We will look at that in a minute. We had a very nice parabolic channel breakout close at the extreme also. That helps, as we discussed. Entry 10:30 sweet spot in London. So open box London, first hour high and low, 8 hour high and low. We wait until it breaks out of the open box, retest VWAP, breakout first hour high, breakout 8 hour. Then we are interested, time rotations. Here 10:30 sweet spot. And then we just go to the 3x here. I think it was just a timing thing, target 8 hour 1x I took here. Okay, cut the trade after open box 3x after 20 minutes already because it was 150 pip R5. So you could have held longer, not sure if this was too conservative. It was probably the 30-minute rotation approaching that made me cautious here. And also you see, I mean, 1, 2, 3, 4, 5 minute in breakout close bars in London after 150 pips already. This is often enough for a trade. So here you see it. That was the week before. This was a fake out high, fake out low, day 0 situation. Lost the next day. Then we take the range expansion target like this here, and you see also how nicely this was hit. And there you see the logic. Open range, breaking out, that's the weekly level. We have the day 0 in our back. You nicely see the parabolic channel to the open box 1x. That's a beautiful pattern. And then we had here the breakout with the open box continuation entry, and we just took it up here to the target. That's the pattern. No need to show to the lower time frames. Again, this is exactly what we're looking for, especially also after a couple of days. If you still have the target above, as I said, it's very good to just take the breakout continuation trades until you hit the target, and then you need to be careful again, of course. Another example, NASDAQ, you can replay that yourself if you like. 12th of September, parabolic week, outside week blow off. So we had an outside week that broke out. Breakout continuation, entry 1020 after VWAP retest, switch candle, target inside day 1x was there. So a couple of parabolic situations overlapping. I like that a lot. Hit after 30 minutes, 55 pips, R4. So there you see it. Open box. We have the 8 hour here. It's even an outside 8 hour, even better. As you know, peak formation high, peak formation low on the 8 hour, then a breakout of that. So we look at the continuation, so a lower time frame parabolic with an inside day target above and an outside week blow off. That's insane. And then I even took it inside the open box here after this stop hunt switch candle, and I just took it up to the target of the inside day 1x. Very nice trade, not huge, but a very nice, very high probability R4 trade in this situation. So these were the blow-off examples. So let's look at reversal range examples. As we know, we look for bearish overall situations, and then we look for the range to hold, and then trade the range from the inside as a range trade. So outside day range, next day on the euro. Outside day setup still in play. We will look at that. Nice deathline setup with a breakout close on top. So that's always nice. So you see this is, you see already everything here. No need to go to the charts even. That's the outside day on a Monday. Outside day here. Outside they broke out and then traded sideways and trapped volume above this daily breakout level, but this day just traded around the level. So this you'll see often, that the outside day then failed the next day. So you have this outside day becomes a day zero because you have a fake out high then here. And this fake out high pulled down, and then all of this was trapped. Deathline setup. Breakdown continuation, low hanging fruit. 10-15 sweet spot entry as always. Target previous week's close iron fist, 2.5 hours R4. So there you see open box, pulled a bit back, then lost the open box. We want to wait here for the daily level and the fake out high, the weekly level. So that's no, the daily was a fake out high here already, but here then it becomes a low hanging fruit, but here was the weekly level. So this was a weekly breakout, and as soon as you lost the weekly level also, the multi time frame aligns from the lower time frames up. Breakdown continuation, low hanging fruit, 2-star trade. Outside day zero range, target is down here, but we are satisfied with our 2.5 hours R4 trade into the weekly closing price R4. Very nice range situation. And here you see already the thesis. Outside day fake out high continuation was my thesis. So then the reversal trade I was referring to, I like this a lot because it's a very nice example. It's a session zero range trade. So on the very low time frame, 3 hours of rise in breakout, late session reversals. Entry 11:10 in London, open box 1x engulfment. So open box 1x. Sometimes I take this as an entry as you lose that. Target open box low, daily breakout. So here was the daily breakout level, open box low again, where the move started, as we know. Hour 1, hour 2, hour 3, reversal. That's 3 hours of rise reversal trades within a session zero range. And this was an insane 500 pip R10 trade in 10 minutes. So you see entry up here, target down here, 10 minutes, 500 pips. That's exactly what you want to have. That's the parabolics we're hunting for. So let's look at the chart. So let's look at this on the 15-minute. So there you see it, Asia putting in a strong peak formation high, pulling back in. Then you get a strong peak formation low in New York the day before. So this is your session 0 range. And then we got a breakout of the daily here, working its way back up. And we came close to this range high. And then it's in the end a reversal trade, as I already said, within the parabolic range. So there we had a breakout, and I will show this pattern in my last play. 3 hours of breakout, so 1, 2, 3 in a breakout situation within the range. So as long as it's not breaking out, I'm very aware that this might turn around here, and then I like this pattern a lot, and there was no reason to believe that this goes up from here. Then I scalped here the reversal. That's an expert trade, but you see you can also use these ranges in the parabolic higher time frame situation as confluence sometimes. So that's it. What's next? So we discussed now today the day 0 after the trend continuations and the reversal into trend. The next one will be looking at is the inside day. It's a bit similar but also different. Also one of my absolute favorite plays, and I'm already looking forward to presenting this to you. So if you liked what you've been seeing, follow these links here. Especially there is a welcome pack on my WOP where you can access our Discord community and also get a welcome document and a free indicator that already helps you. Other than that, if you liked it, please leave a like or follow me. If you have any questions, just write in the comments. Thank you for watching and have a nice day.